of California cities where home insurance is becoming nearly impossible to get or impossible to afford. The truth is becoming harder to ignore, and tonight we're stepping into one of California's most urgent, unsettling crises. This is not about home prices. This is not about interest rates or affordability alone. This is about something deeper, something quieter, something that strikes at the very foundation of what it means to own a home. Tonight, we uncover 5 California cities where home insurance is becoming nearly impossible to get or impossible to afford. Because without insurance, a home is not security, a home is not safety, a fragile structure standing one spark, one storm, one disaster away from collapse. Families are being dropped. Premiums are doubling, even tripling. Entire neighborhoods are considered too risky for coverage. This is the new California reality, and for millions, this is only the beginning. Let's begin. Number 5, Santa Rosa. Santa Rosa sits in the beautiful wine country, rolling hills, long vineyards, breathtaking sunsets. But beneath that beauty lies a truth few talk about openly. This region has faced repeated wildfire devastation for over a decade. Entire neighborhoods burned to ash, whole communities lost, families still rebuilding, some for the second or even the third time, and insurance companies are watching very closely. Homeowners here are now seeing premiums jump from $2,000 per year to $6,000, $9,000, even $12,000 if they can get a policy at all. Many longtime residents are being dropped without warning. Letters arrive in the mail. No explanation. Just one sentence that changes everything. We will not be renewing your policy. If Santa Rosa continues facing this level of wildfire risk, insurance access may become a privilege, not a guarantee. By 2026, parts of Santa Rosa may be functionally uninsurable. Let's move deeper, to a city whose story is even more painful. Number 4, Paradise. Paradise, a name that once sounded like hope. Peace, a small-town sanctuary beneath the pines. But everything changed in 2018. The Camp Fire, the deadliest wildfire in California's history, destroyed nearly the entire town. Thousands of homes, thousands of lives uprooted. Paradise is rebuilding, but the insurance reality is brutal. Many homeowners now face premiums over $15,000, $20,000 a year. Others can't find an insurer at all. They're forced onto California's FAIR plan, the state's last resort fire insurance program. But even the FAIR plan is struggling with demand, and homeowners are left wondering, how do I rebuild a life if no one will insure it? Paradise is surviving, but it is surviving without a stable insurance market. And that makes the future uncertain. Next, we go to Southern California. Number 3, Pacific Palisades and Tujunga, Los Angeles area. The Los Angeles region is massive, from coastal mansions to hillside communities. But within this giant region, 2 neighborhoods stand at the center of a quiet insurance disaster. Pacific Palisades and Tujunga. Both areas face a dangerous mix of high wildfire exposure, steep terrain, and weather patterns that turn small sparks into major threats. Insurance companies have been pulling out, dropping longtime customers, raising premiums to levels almost no family can sustain. Some Palisades residents report quotes of $30,000 per year. Others were told no private insurer would cover them at any price. Tujunga, once an affordable entry into LA's foothills, now faces the same fate. Policies canceled, premiums skyrocketing, families forced into the FAIR plan. These areas are learning a painful truth. When insurance goes, affordability goes with it. And when affordability dies, the entire community begins to change. Now let's move north again, to a city facing a new and surprising crisis. Number 2, West Roseville. West Roseville wasn't supposed to be on this list. It was considered safe, new, modern, a place for families looking for security outside Sacramento. But something unexpected is happening. Insurance companies are now refusing to cover even brand new homes built less than 5 years ago. Because the wildfire maps changed, and West Roseville suddenly sits at the edge of high-risk zones. Families moving into new developments are shocked when they discover they cannot get homeowners insurance, fire insurance, or even basic coverage. Their only option? the FAIR plan, which is slower, more expensive, and not ideal for full protection. The fear here is real. If new construction is already becoming uninsurable, what happens in 2026, 2027, 2030? West Roseville is a warning sign, a quiet signal that even safe cities may not stay safe forever. Number 1, San Diego. San Diego, a city known for perfect weather, calm oceans, and postcard views. A place that feels safe, stable, almost protected from the chaos of the rest of California. But beneath that sunshine is a reality most people never see, a reality homeowners are now confronting for the first time. San Diego is quietly becoming one of the hardest regions in California to insure, not because of one risk, but because of 3 converging risks at the same time. Coastal flooding and erosion. Along the beaches, from La Jolla to Mission Beach to Imperial Beach, the coastline is shifting. Storm surge is stronger, king tides push farther inland. Some neighborhoods now flood during high tide alone. When insurers expect losses, they leave. Inland wildfire risk. Many people forget that San Diego County stretches far inland, into canyons, dry valleys, and brush-covered hills that ignite easily and burn fast. Places like Poway, Ramona, Valley Center, Escondido, Alpine have all been flagged as extreme wildfire corridors. Private insurers have already begun quietly dropping thousands of policies in these inland regions. Not publicly, not loudly, just a letter in the mailbox and a family left scrambling. And now, the biggest problem. Multiple major carriers have limited coverage, frozen new policies, or exited parts of the market altogether. For some San Diego homeowners, premiums went from $2,000 per year to $5,000 to $9,000. And in some inland cases, over $12,000 per year. Families who lived here for decades, through good years, bad years, fires, storms, are being told, "We can no longer insure your home." And without insurance, mortgages collapse, sales fall apart, dreams evaporate. San Diego was never supposed to be on this list. It was the city people escaped to, not the city people escaped from. But now, high-risk maps are changing, coastal regions are reclassified, inland areas are flagged, insurance models are rewritten. San Diego, the city marketed as safe, is suddenly one of the most fragile insurance markets in the state. If this trend continues into 2026, San Diego may become the largest coastal metro in America, where standard home insurance is nearly impossible to secure at a reasonable cost. Not because people don't want to live here, but because they simply can't afford the insurance that makes living here possible. San Diego is the warning. The quiet message about California's future, written in rising premiums and disappearing policies. This is the city that shows us what comes next, and why millions of Californians must prepare now, before the market shifts even further. If you want clear, honest breakdowns of what's really happening across California, make sure to subscribe. More straightforward updates are coming. Stay informed, stay prepared.